DATs, Digital Asset Treasuries. It's what crypto legend Dr. Fong, CEO of HK Group, calls better than an ETF. MicroStrategy used it and their stock outperformed Bitcoin itself. Could this be the next gateway to trillion-dollar assets? Is this the next wealth secret for everyday folks like us? Hi everyone, welcome back. I just got back from the Bitcoin conference in Hong Kong and wow, it was packed, it was great. I met tons of friends from traditional bank guys keeping an eye on everything, CEOs to KOLs, podcasters from all over the world, maybe even some you know, some you like and follow already. I even ran into a few of you, it was really nice. Anyway, I listened to dozens and dozens of talks, with 99% of them being the same old stuff. But that term you just heard, DATs or Digital Asset Treasuries, it really stuck with me this time. Unlike in Vegas where it sounded more like propaganda, it was like, it didn't hit the same. Why did it stick with me that much this time? Because it answers a question I've been wrestling with. Besides holding Bitcoin or buying ETFs, is there a smarter, more aggressive way for regular people to play this game? We all know Bitcoin price is getting crazy expensive. Owning a full Bitcoin is out of reach for a lot of people these days. ETFs helped solve part of that problem. They brought Bitcoin from the crypto blockchain to the stock market. That means trillions of dollars in traditional markets can indirectly invest in Bitcoin by buying stocks. But DATs, it offers a different, maybe even more powerful approach. So, if you are hearing about DATs for the first time, or you are looking for a way to invest beyond just buying coins, this video is for you. If you like straightforward, in-depth analysis like this as soon as it drops, make sure to subscribe to my channel and hit that little bell icon. That way you won't miss any key info that could totally shift how you think about investing. So today I'm going to break it down with simple analogies and cover three things. First, what exactly is a DAT? Second, why DATs might be even more powerful than ETFs? Third, what are the pitfalls for regular investors like us? What are the problems? What are the risks? Let's get into it. So, what is DAT? I know DAT might sound brand new for a lot of you, but it's super easy to understand. Forget the complicated definitions. Here is the real-world definition in one sentence. Instead of buying Bitcoin or another digital asset yourself, you buy shares in a company that is going all in on Bitcoin or another digital asset. And sometimes they do that even with borrowed money. Alright, so to help you lock it in, I've put together a quick comparison chart. Buying coins on-chain versus ETFs versus DATs. Pause the video and screenshot it if you want, it will be super helpful later. But here is a quick rundown of that chart. Buying coins is the purest, direct play. ETFs are the easiest, but DAT, it's like betting on a super leveraged opportunity. It will have the highest risk, but also the highest rewards. Let me give you an example in case it's still a bit fuzzy. Imagine this. You invest $100 in a company like MicroStrategy or Strategy. They take that money, plus millions more, sometimes even borrowed, and buy a ton of Bitcoin. Now, say Bitcoin goes up 10%. Because the company is so leveraged, their stock might shoot up 20%, 30%, even more. Why? Because they are not just holding BTC. They have amplified it with the debt and market exposure. Stock appreciation and yield together let you hit the jackpot. But what if Bitcoin drops 10%? That is the danger. Your $100, it might not just go to 90. It could fall to 80 or even 60 because the Bitcoin drops, but not the debt. That's the double-edged sword of the DATs. When BTC goes up, you win bigger. When BTC goes down, you bleed harder. So it's not for the faint of heart. But if you know how to use it right, DATs becomes more than just a Bitcoin play. It's a high-powered vehicle for strategic, aggressive positioning. Why do big names like Dr. Fong, CZ, Adam Back and other investing heavyweights think DATs are the best choice and that they could outshine Bitcoin ETFs? First off, DAT isn't some niche thing anymore. It's getting a big deal. I checked the numbers. Over 170 companies worldwide are publicly stockpiling Bitcoin, with a total value of over 111 billion. The top dog? Strategy, holding 636,000 Bitcoins. Here in Asia, Japan's Metaplanet is killing it, ranking 6th globally with precisely 20,000 coins. By the way, they were the title sponsor at the Hong Kong conference. Interesting. I wanted to catch their CEO, Simon, at his talk, but he didn't show. But guess who did? Eric Trump. Yes, that Trump's son, who is an advisor for MetaPlanet. He was on stage, hyping up Simon and, of course, Bitcoin.
So where is Simon, first of all? He was right here. I saw him a second ago. Where's Simon? Simon, stand up, buddy. Come here. Come do a little victory lap over here. What this guy has done for Bitcoin in Asia is unbelievable. I mean, he is the Michael Saylor of Asia. He's a wonderful guy, a guy who's become a dear friend of mine, and he called me a year or two ago and he goes, Eric, would you like to become involved with the company? And I said I'd absolutely be honored to. And I couldn't be more proud to stand by his side. You know, he has single-handedly changed not only Japan in terms of the way they looked at digital assets, but a lot of Asia, and he deserves tremendous credit. So to our good friend, we absolutely, we love you. You're great.
So friends, this isn't a few companies going rogue. It's like a Bitcoin army forming up. It's getting global. And this army is strong because DATs have 3 superpowers that ETFs just don't have. The first superpower is leverage, what sometimes they call velocity. ETFs play it straight, you know. How much money you got, that's how much Bitcoin you buy. But DAT, it's a company, and companies can borrow money. They can issue bonds. They can sell more stock. They can use that cash to buy even more Bitcoin. That's why I say it's like a leveraged Bitcoin. If Bitcoin jumps 10%, the stock might climb even higher. And that's often the case. Their second superpower is they have the hype amplifier thing. ETF prices just track Bitcoin's prices. It's plain and simple. DAT stocks, they are different. They are tied to Bitcoin's price and the company market buzz, the company hype, the company news. Say a company announces, we just bought 10,000 more Bitcoins. The market goes wild and the stock could spike in a day. It's easiest to move the price of a stock with hype than the price of Bitcoin nowadays, you know? And DATs get a double win sometimes. With the most known companies like MicroStrategy or MetaPlanet announcements, Bitcoin's price will go up and the whole market will get excited. So it's a win-win, win-win-win. And they have a third superpower. They have kind of a safety net. This one is pretty cool because if a DAT company stock price falls below the total value of the Bitcoin it holds, what happens? Smart money will swoop in to buy it up because it's like getting Bitcoin at a discount. This creates kind of a safety net for the stock price. That's something ETFs can't offer. Anyway, great talks at this conference. Good infos. Speaking of the conference, I still gotta call out the organizers about the organization because I was tracking the schedule to catch CZ's talk, but they didn't update it. So he showed up out of nowhere, and by the time I got there, as I was with my kids and an old OG friend, I only caught the second half. But luckily, I got to hear his take on the DATs. He thinks it has way more potential than ETFs too, because it's not just a passive index, but a company that can actively create value.
The DATs, right? Yeah. So digital asset treasury companies. I think it's great. Again, I think it's number one, fantastic for crypto, or it's fantastic for Bitcoin. And what's good for Bitcoin is good for crypto. And in addition to Bitcoin, we're seeing many other cryptocurrencies doing the same thing, copying like the MicroStrategy, right? So DAT companies for BNB.
By now, you are probably pumped, thinking you've found the secret to getting rich. Just buy companies that have DATs. Not so fast, young Padawan. Big superpowers come with big risks. I've got to stress this. Every new concept you find, that has high rewards, great opportunities, you might also get massive risks. Knowing the risk is way more important than chasing the reward sometimes, because while opportunities make you money, risks can wipe you out totally. So let's talk about the risks. The first, what if it's a bubble trap? Sometimes, it's a bubble. The market gets too hyped and a DAT's stock price shoots way past the value on its Bitcoin holdings. That's called a premium, basically a bubble. If the market cools off or short sellers accumulate, that premium can collapse. Even if Bitcoin price doesn't drop, your stock could tank hard, way worse than just holding Bitcoin or an ETF. So if you are an early investor in this company, it might be okay, but for those who entered late, beware. Then there is the risk of share dilution. I mentioned company can raise money to buy more Bitcoin, which is great. But the flip side, it's a risk too. The most common way they raise cash is by issuing new stock, called ATM offerings. What that means for you, your shares will get diluted. It's like a cake, the cake might get bigger, but more people are splitting it, so your slice could end up worth less. It's a slow but steady drain on your investment. And then there are, what I don't like, company risks, the third risk. With ETFs, you only worry about Bitcoin's price. With DATs, you've got to worry about the company itself and its leadership too. First, there is decision risk. The management's call, like whether to borrow more or buy back stocks, stuff like that can massively swing the stock's value. Then, it's sad to say, but you also have to think about the leaders of the company. What if they post a racist tweet on X? What if they die? What if they cheat on their wife? That could tank the price too. And there is also accounting risk. Starting in 2025, US companies have to value crypto assets at fair market value, and I think it will be the same globally. That means crypto price swings will hit the company profits directly, making their financials a roller coaster. Huge profit one quarter, massive losses the next. That kind of volatility can scare off traditional investors. Take Metaplanet, for example. They've done great transition into a Bitcoin-focused company, right? But their stock still has dropped over 50% since mid-June. You can check that. That's due to company operations, market vibes, and other factors. It's not always and exclusively tied to Bitcoin price. It's just a treasury for them, or its price, or other coins for other companies. I'm talking about Bitcoin mostly, but it could be Ethereum. So yeah, let's wrap it up. DATs are like Bitcoin, ETH, digital asset exposure, plus company leverage, plus market hype. All three rolled in one. So I get why it's an awesome tool for bridging the crypto world to traditional markets, and it's got indeed huge potential. But the risks, they are way higher than ETFs, no question. Personally, I might put a small chunk of my money into DATs I like, but it would be a high-risk side bet. My core investment will always be Bitcoin itself, spot on-chain, because I specifically hate the risk of the company's leadership affecting the price too much, the third risk I talked about. I love that Bitcoin has no CEO for that. What about you? Are you going to jump into this high-risk, high-reward game? Or maybe you are already in? Tell me in the comments. And if you are curious to know more about DATs, if you want to discuss how to calculate a company real value or how to dig into this company's financials, drop a comment or hit me up on Telegram. The link is in the description. If enough of you are interested, I'll do a deeper dive in another video. I'm Cédric, and I'll catch you in the next one.